Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar bulls returned in greater numbers after the Australian Bureau of Statistics, also known as the ABS, released data of 44,000 jobs that were added to the Australian economy in August, much higher than the forecast of 18,000 that the economists had forecast. The job rate also remained steady at 5.3%. Since carving out a high of 72.28 overnight, and did question at one stage whether the market could take on the bullish challenge, soon fouled and slipped back under the 72 cent. So for those that are short, the market looks comfortably negative at this point, and I do expect to see further weakness. The downside target at this stage is at 71.55 and down to 71.30 for the intraday outlook, with the broader picture still holding towards 69.40.80, which I eventually expect to see it reached. Keeping an eye on these technicals, though, is the fact is that the dollar index was weaker last night and has casted some doubt on some of my views. But nevertheless, the Aussie did play out to the bearish scenario from the rejection of above 72 cents. Any advances still looks towards 72.10 as a potential sell region. A little bit of a mixed story here when it comes to euro is the fact is that the heads turn left and right after the release of the worse than expected US CPI number out last night, temporarily lowering the Fed Reserve rate hike for December. However, it is expected that the quarter point rate hike will remain locked in for September's 25th, 26th FOMC meeting. The euro dollar has managed to recapture losses as it holds to the top side of 117 figure, with the commentary overnight of the ECB Mario Draghi saying that he pretty much sticking to his cautious script, confirming plans to unwind the bond purchasing at the end of December and repeating his pledge to keep interest rates steady at least through the September of 2019. The main concern now is the fact that the dollar index has broken beneath the level of 94.5. As some of you may or may not know, is that the dollar index is weighted against a basket of 6 major currencies, and with the euro weighted at 57.6, has put a bit of a game changer. For the fact is that the downside objective now for the dollar index comes in around 93.5. This could give further advance to the euro to not to 117, but 117. 55, 65, which is clearly evident that the market is very heavily contested around that region and has been respected and rejected. The support on the day comes in at 116.45, and it is viewed from there that would reinstate the downside to a bearish case, but at this stage, with the dollar breaking through 94.5, does give some concern. The dollar yen, although I haven't been bullish, has broken above 111.80.90, and with the bulls crushing this level, now looks towards a region of 112.50.60. I'm not a bullish trader at these levels. I don't feel that the market does have the same kind of impact in terms of some of the price structure and technical structure of how we're looking. Nevertheless, the market did get the upper hand and took out the level of 111.80.90. So let's see if it can progress further to 112.50.60 and reassess from there. Support on the day comes in at 111.45. The pound is now taking out my stop at 130.90, and I am neutral at these levels. Overnight, the Bank of England kept its interest rate on hold and maintained its benchmark at 0.75%. With an unanimous 9-1 decision, the Bank of England last raised its interest rates in August for the second time. In the rate statement, though, the policy makers noted that there had been little change on the domestic front since the August rate hike, but added that there was a great uncertainty in the financial markets over the Brexit withdrawal next March. The Bank of England may decide to stay on the sidelines and hold rates until after leaving the UK and the EU divorce. So let's see how that plays out to minimise any expected disruptions that the Brexit will have on the Britain economy. Lowering interest rates will make it harder for the pound to strengthen unless the UK economy shows stronger growth than expected. But the overnight break of 130.90 leaves me neutral. But the levels for the intraday looks at 130.45 to 131.60.80. Well, the gold overnight took the challenge to the upside and rejected the level of 1,212. From the rejection, that gives some question if we're seeing a top. At present, I do look to see a range for an intraday outlook of 111.99 to 1,206, with 12 still capping. But at present, it's still trading sideways, and I still don't have a strong view for the moment. Wrapping up with oil, well, I did note the fact that $71 a barrel was a bit of a cap. Overnight, the market fell over 2% and now puts the $67 support back in focus. With the technicals breaking down once again after this surge that we had, the fact is I believe the market will progress lower, as I've been holding for some time now. Now a break of 67.10 would give further scope to the region of $64 to $62 a barrel. Resistance on the day seen at 69.70. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day and a great start to the new weekend.